let's do some quick introductions and we'll get right to the interview. First of all, hi, I'm Andrew. I'm with Investors Hub, and today we're going to be talking with Vitaliy Katsenelson, and he's going to be chatting with us about his view on Uber as an investment. Please note that our videos are not designed to be direct investing advice. We're here to gather the perspective of different investors. Our channel and our content should just be one stop on the journey of trying to find out where to put your money. So chapter points are up next, then we'll hear from Vitaliy. So you mentioned to me that you think that Uber is a buy in the market right now. Why do you feel that way?
Well, let me just make it clear. I think it was much more attractive at the lower price. I think at this price, I think it's still undervalued. Our position size, for new accounts, our position size in Uber would be a lot lower than it was $20 ago. But I think Uber is a very interesting company to me because it doesn't really, I'm a value investor. And when you think about value investors, you don't think about them owning Uber-like companies. And what's interesting about Uber is that I think it's still a misunderstood company because Uber made a lot of headlines when it went public. Like you read almost every major newspaper and they would tell you they just lost $4 billion of earnings. They just, that's how the company never made money. But what's interesting about Uber is that it's not if you look at it's not a traditional tech company. It's not like Facebook. No, at the same time, it's not a kind of old economy company. It's a hybrid. It's a hybrid between it's kind of between analog and digital. Okay, so think about Facebook for a second, or a company like that, or Google for that matter. When these companies grow, their costs are, they grow revenues. At some point, they get to escape velocity where the costs stop growing very fast, revenues go up, and suddenly they start minting money. So what's interesting about Uber is that when the faster it was growing, the more money it was losing, and that did not fit into traditional models. Where people looked at Facebook and said, well, see, this company is growing, it's making more money. This one wasn't. The reason for that, because it takes a huge amount of capital to go into market and create a two-sided marketplace. So yes, Uber does not own the cars, but it basically, in some markets, it had to pay drivers to sit and do nothing while they were going and looking for consumers to bring to those drivers. So that was cost. So it took a lot of money, for them to actually create that two-sided marketplace. That's number one. Number two, every single time they entered a new market, there was some kind of legal fight with the taxi drivers. So that cost them a lot of money. In addition to that, they had a very relatively large R&D expense. So that was another fixed cost. And the last point, which is very, very important, until maybe a year and a half ago, there was a huge fight between Uber and its competitors because there was a lot of crazy money going into that space, and its competitors were basically willing, there was a lot of money burned by Lyft. Let's say Lyft, basically provided unprofitable rides just to grab market share. So I think the fight for the market share is over. So now you have a company that basically, they got to the point where their costs stop growing, the fixed costs stop growing, and every time you take an Uber ride, the cost for Uber to provide that ride is almost zero. So therefore, incremental costs, so the huge portion of that revenue drops to the bottom line. So as the Uber starts growing more and more, as things come back to normal, its cash flows will explode.
So part of Uber's business is their delivery business. Do you think demand for that service will wane after COVID is gone?
I think that business will be larger post-COVID than it was pre-COVID, but probably it's going to reset to a lower level. Just in other words, we went from very little to a lot, and maybe we'll set to 2/3 of a lot. But one thing that has happened, our habits have been changed. first I was ordering Uber Eats because I didn't want to go, for the health reason, for the health risks, etc. Now I'm just, or now I'm now ordering because it became part of my, I created a habit, and I'm now too lazy, and I'm not the only one. So that business will likely is going to continue to grow. It's probably going to reset down at first, after the COVID is over, but it's still going to be a very large business. The tricky part about Uber Eats business, delivery business in general, is that it's a lot more difficult for that business to get profitable than for traditional business. And because in addition to, like in the traditional, Uber X business, you have three participants. You have a passenger, driver, and Uber in the middle. In the Uber Eats business, you also have a restaurant. And for that reason, it becomes it's a more difficult business to get to profitability. However, I think what's going to happen is that companies that figure out. So let me give you this example, and I think it's going to make sense. When you come to Chipotle, for instance, as a driver, and you pick up 3 burritos instead of 1, and then you just drop it off to houses next to each other, suddenly the driver can make maybe half as much on each burrito, but still make more money than he would have made if he just dropped off 1 burrito. Okay, and I think this is what it's going to come down to. It's going to come down to density of how many orders you can pick up at once. Okay, and also if you right now the market is still a little bit fragmented. Over time, I think you're probably going to have only 2 players left, and then I think you actually get to profitability. But it's not there yet. I think the promise is going to be profitable next year.
So Uber just spent $1 billion to buy an alcohol delivery company. Does that still fall under the same sort of path to success, you think, as the restaurant business of delivering food from burrito places or wherever?
I think the more the company that can keep the drivers the busiest wins, right? Because if you are a driver and you spend 10 minutes out of 60 minutes doing productive things, then you're going to make a lot less money if you spend 55 minutes out of an hour doing productive things. So the alcohol allows drivers, basically increases utilization of drivers, and therefore increases drivers' earnings, which makes drivers happier, and also even though they pay $1 billion, they can scale this business very quickly because they already have a platform, right? So actually, $1 billion used to be a lot of money. Now it's when you have SPACs, when you have companies traded $100 billion without with very few with no earnings or revenues, $1 billion seems like what used to be $10 million now. But anyway, so I think in the long run, if they integrate it well, which I think they will, that's going to be a huge net positive forward.
Do you think that Uber will face additional legislative challenges and governmental challenges in the future? There's controversy on how they contribute to the gig economy. Do you think that they would be able to be successful even if they were required to treat their workers like employees?
Yeah, so I think what I think is going to happen, there's going to be a lot of friction because I think the current laws are really not created for the gig economy. I'll give an example. My son, who is 19, in 15, 20 years ago, maybe 10 years ago, he would have had a job at he's a college student. He would have had a job at Chipotle or McDonald's or whatever. Okay. Now he works for DoorDash in his free time, and that's how he makes money. So, and he decides to work whenever he wants to work. So should my son, and the reason he likes to have that job because of his flexibility, he can do this between classes, etc. So that is a different, he's a contractor because he basically chooses the time when he wants to work, and he can work for any other company. if he worked for McDonald's or Chipotle or whatever, he would have a very set schedule. Then he would be an employee. I guess the point I'm trying to make is that the current law is not really needs to be modified to accommodate kind of this hybrid system we have between the contractors and employees. And I think over time it's going to happen. And the reason I'm optimistic about this is very simple. People want, the workers want flexibility. My son does not want to have set hours working for DoorDash. So workers want flexibility of contractors. And the users of these services also don't want sky high prices. If my son becomes an employee and all these benefits that these companies have to pay, then either the pie, the economic pie is not growing per se. On the at least on a per hour basis. So therefore, I think what's going to happen is that it seems like the government wants to workers to make more money and wants to give them the benefits, and I get that. But at the same time, consumers love this service and they don't want the service to be killed, and which could be killed if they just if they start imposing delivery drivers or delivery drivers as employees. That's point number one. And point number two, which is important, the drivers don't want to be employees. I mean, I read studies about this, and I don't remember the numbers now, but the predominant number of drivers don't want to be employees. So I'm not worried. We're going to have hiccups and headline news in the short run, but in the long run, I think we'll find a kind of middle ground.
Thanks for watching. Be sure to like, comment, and subscribe if you like the channel, and I'll see you again soon.